Real estate forecast for 2026. I will be focusing on Silicon Valley after giving you a broader overview of the national market. So, everyone is asking the question, is this going to be the year of strong rebound or is this going to be a year of bust? And there are cases for both of these. So what I have done is read a lot about analysis from Goldman Sachs, McKinsey, CBRE, BlackRock, and the likes of these big names, and I have distilled what I have inferred from all of these reports. So let me just give you the headline first, and then if you follow me to the end, I'll be giving you the strategy of how to play investments, particularly real estate investments in 2026. So, for a headline, this is going to be an year of transition. It's not going to be a year of boom or a year of bust, because we are seeing the interest rates at a substantial high. They have started tapering a little bit, and that is what has been my forecast from last year. But there is a very generic undersupply. Since 2011, US has been in a construction contraction zone, and because of that, we are in undersupply. The second important factor that is influencing real estate to be contracted is the low interest rate refinances or purchases that most people have done back in 2022. They cannot even afford a home half the price of their home, and so they think I can just stay put where I am because my interest rate is extremely low, and that's causing a supply problem. So on one side you have a construction problem, which we are short on inventory, and on the other side we have this stay put glut that does not allow people to think about moving unless there is a desperate situation in their life. So those are the two reasons why we have an undersupply. So high interest rates, undersupply, and then immigration. We have seen a very different immigration environment just now in the market at this point in time. And if you read the news yesterday and today, this week, the Venezuelan war that we are at. So that adds to the fire. So these are all the factors, macros, that will dictate real estate. Having said that, there are some bright markers on the horizon. Number one is the stock market is still almost at the peak. So investments and money is flowing there. AI is booming big time. So that's another positive aspect. So irrespective of the amount of doomsday scenario that we are seeing, there are these two huge upsides that are holding up. And so there's some counterbalance that we'll see going on. Now, let's bring it back to the Bay Area and Silicon Valley. Bay Area and Silicon Valley are completely landlocked. You have the bay in between, you have the ocean on the left, and rest of it is the hills. Beyond that, it's 3 hours of commute. So most people are very, very landlocked in a very small area. And we do not have that much permission to build high number of units or high densities. Those don't work. So that's another issue. So between all of these factors, the Bay Area market somehow remains very resilient and strong. The AI boom is happening in San Francisco and Peninsula, all the way down here. The automobile boom is also firing up the Bay Area. The AI boom for the software side is coming from San Francisco all the way to the peninsula, and here in the Santa Clara County we are seeing the AI related hardware boom that is firing up the economic activity in Santa Clara County and these neighboring areas. And at the same time, Tesla and Lucid and companies like that fire up the East Bay market. So between all of this, the Bay Area housing market, if it is not rushing up because of the immigration contraction, it's not going down because there is a support from the AI and related investments. Now let's talk commercial. So in case of commercial properties, there is a big differentiation between the markets. The class C and D, which are the older properties, the typical like malls, CVS, Rite Aid, they are contracting, they are reducing their footprint selectively, and so those buildings are having a problem. We are seeing that area in trouble. But data warehouse, warehousing, because Amazon starts shipping in these central areas and so they need the warehouses, and a lot of class A compliant buildings, particularly those that are transit oriented developments, meaning say you have an office building near BART or you have an office building right next to Caltrain here in the valley. Those buildings are commanding premium because people, young crowd that stays in rentals around these corridors, they can come to work using public transport. You know, driving, commute is a killer in this market, and this is where we are seeing that development. So for investors, how do we play this market? This market is about making strategic moves, not about, oh, just buy anything and forget. You have to buy something that will be structurally sound and will give you good returns for your future. So you have to do a lot of comparison, contrasting, analysis, and then play this market. So the interest rate is high, so the returns are not that easy. The market is pretty divided in terms of what it is seeing for the future and what is it looking to pull back on, what is the growth. So these are the 2 or 3 deep thinking items that we need to focus on. So if we can work it out, so if you need that piece of advice, you want to be working with a very knowledgeable agent, realtor who understands the market in and out, along with the macros and the current political environment. So if you think this video was helpful and if you want advice, feel free to set up a call. Happy to help you. We can strategize and then you can go ahead and pull the right gears and take your next one. Thanks for watching. Share if this helps. Look forward to talking to you soon. Bye.